Okay, picture this. What if the United States government started building a strategic reserve of Bitcoin? I mean, it sounds like something pulled straight from a cutting-edge economic thriller, doesn't it?
It really does, almost sci-fi.
But here's the fascinating truth. It's not just a hypothetical anymore. It's a very real proposal. And it seems to be gaining some serious momentum in discussions about, well, national finance and the evolving role of digital assets. Today, we're going to take a deep dive into an incredibly intriguing proposition. The idea of funding a U.S. strategic Bitcoin reserve using surplus revenue from trade tariffs. Yeah, you heard that right. We'll unpack where this pretty audacious idea came from, look at precisely why it's gaining such significant consideration right now, and maybe most importantly, what it could all mean for the very future of national finance and, the profound role digital assets might play on a global scale.
And we're committed to going well beyond just the headlines here. We'll meticulously explore the specific mechanics of this proposal so you get a really clear understanding of its structure and, crucially, its safeguards. Okay.
And we'll contrast it with other innovative budget-neutral strategies for acquiring Bitcoin that are also being talked about right now. It's not the only idea out there.
Okay.
Furthermore, we'll position this proposal within a broader context, looking at both federal and, interestingly, state-level actions that are already underway in the digital asset space. It's not happening in a vacuum.
Definitely not.
By the end of this deep dive, you'll not only gain, we hope, a comprehensive understanding of this cutting-edge development, but also maybe a fresh perspective on what a nation's strategic reserves could and perhaps should look like in the 21st century.
And to give you that shortcut to being truly well-informed on this pretty pivotal topic, we've meticulously sifted through a whole range of sources. Everything from authoritative financial news outlets, in-depth research organizations, right through to official government documents. We've pulled out the most important nuggets of knowledge and insight so you don't have to spend hours digging. Okay, let's unpack this truly transformative idea. Let's jump right into the core concept that seems to be igniting all this discussion. We're talking about a proposal that comes from Adam Livingston. He's known as the author behind works like The Bitcoin Age and The Great Harvest, so he's an influential voice in certain circles.
Definitely has some clout there.
So what exactly is he suggesting? And maybe even more fundamentally, how would this ambitious plan actually work in practice?
Well, Livingston's central proposal is quite specific and, frankly, rather ingenious in its fiscal approach. He advocates for the U.S. government to leverage its substantial surplus from trade tariffs, the customs duties collected on imports, to fund a dedicated strategic Bitcoin reserve. And this isn't just some, abstract theoretical number he's plucked from thin air.
Right.
As of July 2025, the U.S. has already amassed a staggering sum, approximately $135.7 billion, specifically from these customs duties. Now, here's where Livingston spots this really unique opportunity. A significant chunk of that collected revenue, specifically a massive $70 billion, currently remains unallocated.
$70 billion, wow.
Yeah. It has no pre-designated purpose, no specific government program it's earmarked for. And it's precisely this unallocated surplus that Livingston identifies as the ideal, non-disruptive, and, politically palatable funding source for a national Bitcoin reserve.
So it's just sitting there.
Essentially, yeah, it's existing national wealth just sitting idle that could be strategically repurposed. What's particularly clever about this approach, I think, is that it sidesteps the often contentious debates that come with new government spending initiatives.
So if I'm understanding this correctly, and this seems really key, we're not talking about increasing the national debt.
No, exactly.
Or resorting to printing more money, or even, burdening taxpayers with new levies.
Not at all.
Instead, the proposal centers entirely on redirecting funds that are already sitting there, derived from existing revenue streams. That seems like an incredibly crucial detail, especially for anyone concerned about, fiscal prudence and government efficiency.
Absolutely. That's the core appeal, fiscally speaking.
But let's get more concrete then. What would this reserve actually look like? Is it just, a pile of Bitcoin on a computer somewhere, vulnerable to hacking or, easy access? Or is there a much more sophisticated security setup envisioned?
That's a vital question, and the proposal tackles those security concerns head-on with remarkable precision. No, this wouldn't be anything like a simple pile of Bitcoin stored somewhere insecure.
Yeah.
Instead, the proposal specifies an incredibly robust and precise structure for this reserve. The Bitcoin would be held in geographically distributed, multi-signature cold storage.
Right, cold storage multi-sig. Heard those terms.
Exactly. And those aren't just technical details. They're really a profound statement about the intent regarding security. Cold storage means the Bitcoin is kept completely offline, disconnected from the internet.
So immune to online hacking, basically.
Virtually immune, yes. And multi-signature adds another critical layer. It means that to move any Bitcoin from this reserve, multiple separate cryptographic keys are needed.
Ah, so not just one person holds the key.
Precisely. These keys would be held by different independent entities or individuals and, crucially, geographically dispersed, spread out. This prevents any single point of failure or compromise, whether that's from, like, internal bad actors or even sophisticated external state-level attacks.
Okay, that sounds pretty robust.
But the security protocols go even further than that. What's truly fascinating here, I think, is the remarkably strict set of operational controls proposed for this reserve.
Operational controls, like what?
Like absolutely no trading of the Bitcoin within the reserve, so it wouldn't be subject to market timing or speculative plays.
No day trading the National Reserve.
Okay. Definitely not. There would be no staking, in crypto that usually means locking up assets to earn rewards. None of that. The reserve stays dormant.
Right.
Critically, there would be no rehypothecation. That means the Bitcoin couldn't be used as collateral by, say, third parties for other financial deals. This prevents the kind of systemic risk we sometimes see in traditional finance where the same asset gets lent out multiple times over.
Oh, okay. Avoids that leverage risk.
Exactly. Furthermore, no lending it out to generate yield, and importantly, no program funding that directly draws from the reserve itself. It's designed to be dormant, impervious, and unequivocally untouchable for its intended long-term strategic purpose.
It's a very strong list of no's, almost an unprecedented level of restriction for a national asset, isn't it?
It really is.
It clearly tells us this reserve isn't designed for liquidity or active management or, chasing short-term financial gain. So what is the core intent, then, behind such a uniquely structured strategic reserve? What does this rigorous control signal about how the U.S. government would or should view and utilize this asset?
You've hit the nail on the head. This stringent set of prohibitions emphatically signals that the purpose is not to create some kind of active investment fund.
Right.
Nor is it meant to be a liquid asset that could be easily spent or manipulated for short-term gains or even used to directly fund government programs. Instead, it's designed to be a true strategic reserve, a long-term, highly secure store of value. Very much akin to how traditional strategic reserves are managed.
Like oil or gold.
Exactly. Think of the Strategic Petroleum Reserve. It's not actively traded for profit, right? It's held as an emergency supply, a buffer against geopolitical shocks or supply chain disruptions. Similarly, national gold reserves are primarily held for stability as a hedge against currency devaluation, and just as a sovereign asset of last resort, not for daily trading profits. This proposed Bitcoin reserve would function in precisely the same way. Its primary goal is about securing a critical, maybe emerging asset for profound future strategic purposes.
A future-proofing almost.
Kind of, offering a unique form of national preparedness and maybe a hedge against macroeconomic uncertainties, rather than generating short-term returns or being vulnerable to market swings in terms of its core utility. It's really about securing potentially digital sovereignty and long-term national wealth, completely distinct from standard financial operations.
And this specific approach, using an unallocated tariff surplus, you mentioned it actually aligns really well with existing government directives, right?
Yep.
Which presumably makes it more feasible.
Exactly. Livingston's approach gains significant traction, partly because it aligns perfectly with the spirit, and maybe even the letter, of President Trump's executive order. That order specifically mandates that any new Bitcoin acquisitions must be budget neutral.
Ah, the budget neutral requirement.
Yes. This proposal meets that criterion perfectly because it leverages existing unallocated government funds, that $70 billion surplus we talked about, rather than requiring new appropriations or new taxes, or, crucially, increased deficit spending.
It bypasses all those usual hurdles.
Precisely. It avoids the common fiscal obstacles that often plague new, large-scale government initiatives. What's particularly insightful about this alignment is that it demonstrates a potential path forward for integrating novel assets like Bitcoin without disrupting existing fiscal policy.
Oh.
However, this also raises an important question for us to dig into. If an executive order already exists calling for budget-neutral Bitcoin acquisition, why is this specific proposal, the one focused on tariff surpluses, gaining so much specific attention now? The directive is there, but this particular method of funding is what's making headlines.
That's a critical point. Let's dig into that. The why now.
Hmm.
Beyond the sheer size of that $70 billion surplus, which is obviously a huge financial factor.
Can't ignore $70 billion.
No kidding. What else is driving this conversation right now? What's the broader economic, political, or maybe even technological context that makes this proposal feel so incredibly timely and, well, relevant?
The timing is, as you said, absolutely critical here, and it really does extend beyond just the availability of those funds. First, yes, there's the immediate fiscal opportunity. This substantial $70 billion customs duty surplus from July 2025, just sitting there with no designated use.
You're right, the pot of money.
It's a significant sum presenting a unique window to allocate funds towards a strategic asset like Bitcoin without impacting the existing federal budget, without requiring new taxes, and critically, without adding to the national debt. That budget neutrality is a really powerful policy driver, especially in an era of, heightened fiscal scrutiny and concerns about rising national debt.
Makes sense politically, too.
Absolutely. It addresses concerns about government spending by proposing to acquire a strategic asset, one believed by proponents to be important for the future, without creating additional fiscal burden or risking the political backlash that often comes with new appropriations. But beyond that immediate fiscal opportunity, there's a confluence of broader factors pushing this forward now. Things like geopolitical instability, rising global inflation concerns, and maybe a growing skepticism in some quarters about the long-term stability of traditional fiat currency.
People looking for alternatives.
Exactly. That's all contributing to a search for alternative, potentially harder assets. Bitcoin, with its programmed scarcity, that fixed supply, and its decentralized nature, is increasingly seen by some as a potential hedge against these big macroeconomic uncertainties. And furthermore, you have the increasing institutional acceptance of Bitcoin. Large financial institutions, major corporations, they're now holding it on their balance sheets. That lends it a new layer of legitimacy that just wasn't there even a few years ago.
It's a little fringe now.
Much less. This shifts the conversation from, is Bitcoin even legitimate, to, okay, how can Bitcoin be strategically integrated? The current financial climate, combined with a more mature understanding and infrastructure around digital assets, makes a potential digital hedge like Bitcoin seem far more appealing, or at least less radical than it once did. So Livingston's proposal isn't just like a clever financial maneuver. It feels like a response to these evolving global economic realities.
This is a mix of opportunity, the money's there, and perceived need, driven by these broader economic shifts and Bitcoin's own growing legitimacy.
I think that's a good way to put it.
And this budget-neutral aspect keeps coming up. It really seems to be a recurring, almost non-negotiable theme in these government discussions about Bitcoin, like a prerequisite.
It certainly seems that way, a gatekeeper condition.
But let's talk about the broader government sentiment on actually acquiring Bitcoin. Has it been a consistent stance, or have we seen some maybe notable shifts in opinion over time, particularly from key financial leaders within the administration?
Government sentiment has been, well, as you might expect, quite mixed, which makes this whole situation particularly dynamic and fascinating to watch.
Right, not monolithic.
Definitely not. Initially, we saw signals, like reported comments from Treasury Secretary Scott Bessent, that seemed to sort of dismiss the idea of new Bitcoin buys outright.
Okay, so it looked like a no initially.
For many observers, yeah, it might have appeared to be a closed door. However, Bessent later issued a really crucial clarification. He stated that the Treasury is, in fact, still actively exploring various budget-neutral avenues for asset acquisition.
The clarification is key.
Hugely significant. This indicates a major shift, not necessarily a full-throated endorsement, maybe, but a shift from outright rejection or just disinterest to an open, albeit probably cautious and deliberate, exploration of options.
So the door isn't closed, just specific conditions apply.
Exactly. It signals a recognition, perhaps, that Bitcoin can no longer be simply ignored, that its potential role in national strategy needs to be thoroughly investigated. And importantly, that any such investigation must adhere to strict fiscal guidelines, prioritizing that budget neutrality to manage both political and economic risk. This clarification really opened the door for proposals like Livingston's to gain serious traction, because they fit that specific criteria.
That's a really significant clarification then, showing a change or at least an evolution in perspective within the highest financial circles. So if the Treasury is exploring these budget-neutral avenues beyond just Livingston's specific tariff surplus idea, What are some of those other creative strategies they might be looking at? Are there other ways the government is thinking about acquiring digital assets without, touching the budget or incurring new debt?
Yeah, the exploration of budget neutrality has definitely spurred some remarkably creative thinking, both within government circles and among policy analysts. Beyond Livingston's proposal, other quite intriguing ideas for digital asset acquisition have been floated.
Like what?
Well, one such proposal involves potentially revaluing the government's existing gold holdings.
Revaluing gold. How would that work?
The argument goes something like this. The U.S. holds the largest official gold reserves in the world, right? But they're valued on the government's books at a very outdated historical price, like $42 an ounce or something.
Way below market value.
Massively below market value. So the idea is if the true market value of these reserves is significantly higher than their recorded book value, that huge difference represents a kind of latent surplus in valuation. Theoretically, that unrealized gain could be leveraged or maybe even securitized in some way to acquire Bitcoin without impacting the current operating budget. It's a way of unlocking value from an existing asset to fund the acquisition of a new one.
Interesting. Using paper gains on gold to buy digital gold, essentially.
You could frame it that way, yeah. Another suggestion, perhaps even more audacious, is the idea of selling off portions of the Strategic Petroleum Reserve, our national oil reserves.
Selling oil to buy Bitcoin.
Yeah, selling some of the SPR oil to fund Bitcoin acquisition. This idea stems from the fact that the SPR, while obviously critical for energy security, represents a significant tangible asset on the nation's balance sheet. Proponents argue that maybe a portion of this physical commodity could be converted into a digital asset like Bitcoin, diversifying the nation's strategic holdings portfolio, again, in a budget-neutral way.
That seems bold. Politically tricky, maybe.
Definitely bold and likely politically complex, yes.
Yeah.
But if we connect this back to the bigger picture, Livingston's tariff surplus suggestion doesn't exist in isolation. It mirrors these other creative, maybe even unorthodox approaches that all share that common goal: funding Bitcoin acquisition without hitting the budget or creating new liabilities.
Right. They're all trying to solve the same funding puzzle.
Exactly. It highlights, I think, a profound shift in strategic mindset within certain governmental and financial circles. They're focused on reallocating existing national wealth or leveraging existing assets rather than just expanding the budget or incurring new debt. It's about finding financial maneuvering room, maybe, to acquire what some now see as a vital asset for the future. It shows a certain flexibility in defining and managing national wealth.
So while Livingston's specific proposal using tariff surpluses is getting a lot of the attention right now, it's clear the U.S. government hasn't just been sitting idle when it comes to thinking about Bitcoin as a potential strategic asset. It sounds like the gears were already turning well before this specific idea hit the headlines.
I think it's absolutely right.
What then has the government already put into motion on this front? What foundational steps has the federal government taken previously that sort of paved the way for these discussions?
You're absolutely right to highlight the existing foundational work. It's crucial context. There's a really important piece here that predates this current tariff surplus proposal.
Yeah.
An executive order that was issued back in March 2025.
Okay, an executive order. What did it do?
This executive order already established a strategic Bitcoin reserve. It exists. What's fundamentally distinct, though, and very important about this existing reserve is how it's funded.
How is it funded then?
It's not funded by purchases or, new appropriations through the traditional budget process. It's funded entirely by forfeited crypto.
Forfeited crypto means?
Creating Bitcoin and other digital assets that have been seized by the government in criminal investigations, typically from things like illicit activities, ransomware payments recovered, money laundering operations, other kinds of cybercrime.
Ah, so the proceeds of crime, basically.
Essentially, yes. This reserve exists alongside a broader digital asset stockpile, which includes various types of seized digital assets. So the government isn't just contemplating holding Bitcoin, it's already actively accumulating it just through this specific non-purchase mechanism tied directly to law enforcement actions. It's a quiet but significant accumulation, demonstrating a practical acceptance of Bitcoin as a valuable asset that can be held by the state.
That's a really key distinction. So the federal government is already stacking sats, so to speak, but through seizures from illicit activities, not active market purchases, at least for this particular reserve.
Correct.
Does this executive order, the one establishing a reserve from these seized assets, does that signal a broader institutional acceptance of Bitcoin as a legitimate asset class for the government? Or, as maybe some critics might argue, is it just a practical way for law enforcement to deal with the digital spoils of crime without necessarily endorsing Bitcoin itself?
I would argue, and I think the framing suggests, it absolutely does signal a significant institutional acceptance. It goes far beyond merely being a practical way to manage seized assets.
How so?
The very act of formally designating seized Bitcoin as part of a new strategic reserve, using that specific language, fundamentally signals a monumental shift in how the U.S. government perceives Bitcoin. It elevates it.
Or show just evidence or illicit funds to something.
Exactly.
Yeah.
It elevates Bitcoin from being merely an illicit tool or just a speculative investment for private folks in the government's eyes to something with genuine strategic national importance. By formally including it in a strategic reserve, it implicitly confers upon Bitcoin a status similar to traditional national assets like gold or oil, even if the method of acquisition is different initially.
So the label matters.
The label matters immensely. It's a quiet but profound legitimization of Bitcoin's potential role as a component of national wealth and security. This isn't just about what they're acquiring, it's about what they're calling it and how they're integrating it into the national strategy framework. It recognizes its inherent value, seemingly independent of its source in this context. It indicates a recognition that this digital asset holds utility beyond its immediate connection to criminal contexts.
It's truly fascinating how quickly the perception, or at least the official treatment of an asset, can change once it gets integrated into policy, even if it starts through, seized assets.
It is quite remarkable.
But it's not just the federal government moving on this, is it? You mentioned earlier we're seeing significant and maybe even more overt action happening at the state level, too. That suggests a broader, maybe more decentralized movement towards Bitcoin adoption as a strategic asset.
That's where it gets really interesting, I think, and perhaps even more indicative of a widespread, almost grassroots shift in thinking across the country. States like New Hampshire and Texas have actually enacted laws that explicitly allow for state-level Bitcoin reserves.
Wow, law's already on the books.
Yes. New Hampshire, for example, has taken a particularly bold step. They can now legally invest up to 5% of their state funds directly into Bitcoin.
5%, that's not insignificant for a state treasury.
Not at all. It signals a really proactive embrace of digital assets at the state level. And it's not just those two. Texas and Arizona have also taken very significant legislative and policy steps towards creating their own crypto reserves or otherwise incorporating digital assets into their state treasuries. They're exploring various legal and fiscal mechanisms to make it happen. This really showcases a growing recognition and adoption that extends far beyond just federal discussions or directives. It illustrates a kind of decentralized momentum building up.
That's a truly significant development. What does all this state-level activity tell us then about the broader trajectory of Bitcoin as a reserve asset? Is it maybe a preview of what the federal government might eventually do on a larger scale? Or is it more a sign of a fragmented, state-by-state approach to policy, potentially creating a complex patchwork across the nation?
It's genuinely a bit of both, which is what makes this dynamic so compelling and, frankly, complex.
Okay.
On one hand, it undeniably demonstrates a growing and, importantly, decentralized recognition of Bitcoin's potential. States are effectively acting as, laboratories for crypto policy.
Testing things out.
Exactly. Experimenting with different legislative and fiscal approaches to integrate digital assets into their treasuries. This bottom-up innovation could certainly serve as a blueprint or a proof of concept, or at least provide invaluable lessons, both good and bad, for future federal policy. It shows the idea isn't just confined to Washington, D.C., it's organically spreading. On the other hand, this mapping of U.S. states with Bitcoin reserve bills, when you see it alongside the federal proposals, does indeed show a fascinating decentralization of crypto policy.
Right.
It's not just Washington dictating terms. Different levels of government are actively exploring and, by their very actions, legitimizing Bitcoin as a potential treasury asset. Now, this decentralization could lead to a patchwork of regulations and approaches, which might create complexities for things like compliance or interstate financial relations down the road.
Yeah, potential challenges there.
But it also fosters innovation and responsiveness to local conditions. It suggests that the idea of holding Bitcoin for strategic purposes is gaining real organic momentum across the nation, driven by diverse economic motivations, specific state priorities, maybe different political leanings, rather than being solely mandated from the top down. This groundswell of activity at the state level provides a really robust backdrop for federal discussions like Livingston's proposal. It demonstrates a widespread, evolving acceptance of Bitcoin's potential place in public finance.
This entire proposal, then, combined with the existing context, both the federal actions with seized crypto and this burgeoning state-level movement, it really forces us to think about Bitcoin in a completely new light, doesn't
It
it?
really does.
It's moving beyond just being a volatile investment or a tech curiosity. It's being seriously considered as a foundational, strategic national asset.
So what does this all mean for its potential role on a, macro fiscal level? How does it stack up against what we traditionally think of as national reserves like gold or oil? Yeah, if we connect this to the bigger picture, it fundamentally means seriously considering Bitcoin alongside traditional reserve assets, perhaps even as a direct complement or, in some scenarios, an alternative to them in certain strategic capacities.
So comparing apples and, well, digital oranges.
Sort of. We need to contrast Bitcoin's well-known volatility, we can't ignore that, but also its potential, argued by proponents, as an inflation hedge against the established characteristics of traditional reserves like gold or petroleum. Gold, for centuries, has been prized for its scarcity, its tangibility, its historical role as a store of value, particularly during times of economic uncertainty.
The traditional safe haven.
The traditional safe haven, exactly. Oil reserves, while clearly strategic, are tied more directly to energy security, and their value often fluctuates quite a bit with geopolitical events and global consumption patterns.
Right.
Bitcoin, while much newer, offers unique properties. Yes, it's known for sometimes dramatic price swings, but its proponents argue that its absolute fixed supply, that hard cap of only 21 million Bitcoin ever to be created,
The digital scarcity argument.
precisely, and its decentralized, censorship-resistant nature offer properties that traditional assets simply cannot match. In an environment where there are concerns about increasing fiat currency debasement or expanding national debts, Bitcoin is viewed by many as potentially a superior long-term store of value, one that's immune to the political whims or policy errors of central banks.
Mhm.
And unlike physical gold, which requires, secure physical storage, transportation, all that, Bitcoin is a digital asset. It's easily auditable on its public ledger, the blockchain, and it's transferable across borders almost instantly, albeit with its own unique set of security challenges, as we discussed with cold storage and multisig.
Different kinds of security needed.
Different kinds, yes. Its energy consumption, while certainly a debated topic, is also part of its security mechanism, unlike, say, the environmental impact of drilling for oil. So it's really about diversifying risk, maybe finding assets that can perform differently under various economic and geopolitical conditions, offering a potentially independent, hard asset that could protect national wealth from external pressures, acting as a kind of digital safe haven.
It's almost like asking, what kind of insurance policy does your national treasury need in a rapidly changing global economy? And Bitcoin is being presented as this new digital option, quite distinct from the physical assets we've relied on for centuries.
That's a good analogy, I think.
And this idea of budget neutrality seems absolutely core, almost non-negotiable here. How does Livingston's tariff surplus proposal fit so neatly into that larger overarching strategy of finding these creative, non-disruptive funding sources? What's the real genius, maybe, behind leveraging existing revenue streams this way?
The principle of budget neutrality is absolutely key, politically and fiscally. It seeks to avoid the significant political friction and economic pushback that usually comes with direct tax increases or more deficit spending, especially for something as novel or potentially controversial as buying Bitcoin at scale.
Makes it easier to swallow.
Makes it significantly more palatable, yes, to a broader range of political actors and, importantly, to the public. Livingston's proposal of using an unallocated tariff surplus aligns perfectly with this. It cleverly leverages money that has already been collected that's just sitting there idle, rather than requiring new fiscal commitments that would inevitably draw public scrutiny or political opposition. It's framed not as increasing government spending, but as strategically reallocating existing funds for future benefit.
Yeah.
And as we touched on, this approach is very similar in spirit to those other innovative proposals being floated, like revaluing existing gold holdings, which is essentially unlocking latent, unrealized value on the books, or strategically selling off portions of the strategic petroleum reserve to acquire Bitcoin. All these strategies are variations on that central theme. They aim to leverage existing national assets or revenues without creating new liabilities or adding to the national debt.
Using what you already have.
Using what you already have, exactly. It represents, I think, a fundamental shift towards viewing national assets more fluidly and proactively, considering where national wealth is best stored for the future, whether that's in traditional commodities or perhaps emerging digital ones. It speaks to a kind of modern fiscal agility, finding ways to adapt the national balance sheet to new global realities without necessarily incurring new burdens. The genius, if you want to call it that, lies in its ability to be simultaneously forward-thinking in asset choice and fiscally conservative in its funding mechanism.
Looking ahead then, what are the broader implications if the U.S. were to actually adopt a strategy like this on a large scale? If they really started building out a strategic Bitcoin reserve funded by these kinds of budget-neutral means, what sort of future possibilities does this open up? Or maybe what kind of profound questions does it raise for global finance, for international relations, and perhaps even for the future role of the U.S. dollar itself?
Oh, the implications are potentially vast and incredibly complex. It raises really important questions about the legitimization of Bitcoin in global finance and its potential role in international relations moving forward.
How so?
Well, think about it. If the U.S., still the world's largest economy and a major financial superpower, were to formally and publicly hold Bitcoin as a significant strategic reserve, that act alone could profoundly influence its perception worldwide.
A huge signal.
A massive signal. We would likely see immediate and probably significant market responses, very likely in the form of increased institutional adoption, as other large financial players, corporations, maybe even pension funds gain confidence in Bitcoin's long-term viability, seeing that kind of governmental endorsement. This could accelerate Bitcoin's integration into mainstream finance on a scale we haven't seen yet.
The floodgates opening, potentially.
Potentially, or at least opening much wider. Furthermore, it could set a really powerful precedent internationally. It might lead other countries, perhaps nations looking to diversify away from traditional reserve currencies like the dollar, or those seeking to hedge against global economic instability, or even smaller countries aspiring to greater financial sovereignty. It might lead them to begin adopting similar crypto reserve models.
A domino effect.
You could see a domino effect, or at least a competitive dynamic emerge. Imagine the geopolitical ripple effects if nations started seriously competing to accumulate Bitcoin as a reserve asset. This isn't just about a financial transaction within the U.S., it's about a potential redefinition of what constitutes a reserve asset in the 21st century.
Changing the definition of money almost at a national level.
It challenges the very foundations of international monetary policy, which, has been largely built on fiat currencies and gold since the Bretton Woods Agreement dissolved. Such a move by the U.S. could accelerate a global shift towards integrating digital assets into national economic strategies, potentially reshaping the financial landscape for decades to come and introducing a whole new dimension to geopolitical strategy and competition. It would force a global conversation what is true national wealth in an increasingly digital age.
So we've really taken a deep dive today into this fascinating proposal. Using U.S. tariff surpluses to fund a strategic Bitcoin reserve. We've explored the specifics, this budget-neutral idea, the multi-signature cold storage designed for maximum security, those strict controls against trading or lending. We've also placed it within the existing federal context, looking at how that executive order already established a reserve, funded by seized crypto, setting a precedent. And crucially, we've highlighted those groundbreaking steps being taken by states like New Hampshire and Texas, who are already putting state funds directly into Bitcoin, showing this isn't just a federal idea.
Absolutely. You should now have a pretty comprehensive understanding, hopefully, of how Bitcoin is rapidly moving in perception and potentially in policy, from being viewed solely as, a speculative asset for individuals or tech enthusiasts to a serious contender as a strategic national reserve. This entire discussion, really, from the nuts and bolts of budget neutrality and these creative funding solutions, right through to the actions of individual states, it fundamentally challenges our traditional notions of economic strategy and national security in this increasingly digital and interconnected world we live in.
What stands out most to you from this deep dive? I mean, this whole idea of digital assets, especially Bitcoin, becoming potentially a cornerstone of national strategic reserves. It really is a profound shift, isn't it?
It is profound. We've covered a lot of ground today, but honestly, the conversation doesn't end here. The implications of these developments are vast, and they're continuing to unfold almost daily, it seems.
Definitely a space to keep watching. So, as you reflect on what we've discussed today, here are maybe some questions to consider to keep this deep dive going in your own mind. Should the U.S. truly pivot, even partially, from relying solely on traditional assets like gold and oil towards Bitcoin as a strategic reserve? Or is that just a step too risky right now, given its volatility and, relatively nascent nature compared to gold?
Big question.
Huge. What do you think, does holding Bitcoin in this kind of cold, untouchable reserve, does that fundamentally strengthen a nation's long-term economic strategy? Or could it perhaps subtly weaken it by tying national wealth to a new, largely untested asset class on this scale?
The lockup effect.
Right. And if the U.S. actually did use this tariff surplus for Bitcoin, would that truly legitimize BTC in global finance? Would it signal its arrival as a genuine global reserve asset? Or is it maybe just symbolic at this stage, with little immediate impact on the broader financial system?
Perception versus reality.
Exactly. And finally, looking at all this action, both federally and especially at the state level, do you believe we'll start seeing more states, and perhaps even other countries, adopting similar crypto reserve models in the near future? Could we be on the verge of a kind of global race for digital assets? Lots to think about there. And if this deep dive into the future of national reserves sparked some new insights for you and left you feeling better informed, we'd really appreciate it if you'd subscribe to the deep dive on whatever platform you're listening on.
Yeah, it really helps.
It does. Your engagement, whether it's subscribing, maybe leaving a rating or a review, it truly helps support our mission to bring you the sharpest, smartest coverage on complex topics just like this one. It boosts our visibility, helps others find the show, and allows us to keep creating quality insights for curious minds like yours. Thanks for tuning in.